Folks, I'm sorry. Allow me to apologize because apparently I was wrong. I had no idea that things are as bad as they're revealing themselves to me on a daily basis. And families out there are at risk and they're worried, they're scared, they're panicking. Granted, they are trying to find solutions, but they're more like band aids. It's like putting a band aid on a gunshot wound. It's not really going to fix the problem. It probably won't even keep you alive for much longer. And I received an email from a viewer with a question. Subject line read something along the lines of help with credit card approval. And yes, I know now is a critical time for money, access to money, credit, lending, a possible solution down this deep, dark black hole of an inflation-fueled recession as we approach a deep recession, possibly depression, hyperinflation. But the email asked, Kevin, this is all paraphrasing, can you point me in the direction of a credit card that will give me a higher limit? Okay, all right, it starts off pretty good. And we had a little bit of an exchange back and forth. You guys know it's hard for me to answer questions with limited information. So, some follow-up questions were, what do you mean by a higher limit? And I think it came back, saying that they were trying to get a credit card with a limit over $2,000. So that's got me kind of intrigued about what's going on. I don't want to pry. I don't want to have to get into everyone's business, but I do want to try to help. And perhaps me steering someone in the direction of having the ability to access a credit card with a available credit limit of $2,000 may actually do more harm than good. You guys know, times are tough. Families are out here trying to afford rent. They're trying to afford gas. They're trying to afford diesel where they can get it, where they can find it, in case wherever they go is sold out or out of stock or out of supply, or they have bags on the pumps and you can't fill up. Inflation continues to rise. This is just a growing problem. It just becomes more and more difficult every single day. But nonetheless, folks are trying to find answers. They're trying to find solutions to these problems to survive. So $2,000 on a credit card limit to me is not very high. Now, I have an American Express. I actually have 3 or 4 American Express cards. And I have, I think I have 2 MasterCards. I think I have 1 Visa credit card, so Visa Rewards, through various, my American Express is through American Express. My Visa Rewards, I believe, is through Bank of America. MasterCard, I think my MasterCard's a Bank of America as well. And I don't think I even have any store credit cards, any retail revolving credit. I think at one point maybe I had a Lowe's card. Actually, I might have a Lowe's, which is odd because I'm receiving emails now from folks, one of which asking to confirm if I'm still around, basically. They're like, you haven't been using your accounts. We need to confirm that, you're still active. So sometimes just to keep the credit line open, that's just a simple swipe or a simple login to the account just to verify that, you're still active. I have them. I don't use them really. Obviously, I have one card that I pretty much use on a regular basis for day-to-day purchases, but I don't really purchase that much every single day. but I use it for the safety and the protection of the credit card because I don't want folks having access to my bank account and my cash in my checking account for possible fraud and incorrect charges. You go to a restaurant, the servers, they type in the number wrong, they put the tip amount wrong. You guys better check that stuff. But either way, I've got a few credit cards, and I think I know the credit card game pretty well enough to use it to my advantage, but also well enough to help somebody when they're looking to try to get a credit limit over $2,000. I think my highest credit limit right now might be it's funny how the credit limits on the credit cards, they increase. I've noticed my credit limits increase. Like the cards I never use, they start out with $10,000-$15,000 limit. They stay $10,000-$15,000 limit. But the ones that I get that have the best perks that I use frequently and pay off frequently, they keep raising the credit limits. And I'm going to tell you a little backstory behind that and reason why they do it. The reason why they do it is because the credit card companies, they make money they have 3 customers. The first customer is the first one I was telling you about where the limit doesn't change. The first customer is the customer who gets the credit card for an emergency purpose or whatever reason it may be. Maybe they were they got backed into a corner and they felt bad at the airport and they ended up doing the Delta Sky Miles just to shut the person up. Those people, they corner you, try to sell you timeshares and vacations and credit card. And it's just I know you're struggling. I know you're trying. I know you're grinding. I know you're working hard and everybody here is ignoring you. Fine. I'll do it. I'm never going to use the card, but I'll do it to help you get one because I know it's got to be a tough business to be in to try to do that. Actually had somebody approach me here the other day here in Florida and, they ask you questions because we go around and we visit and check out different places and they hit you with the question, well, where are you guys from? How long you visiting? And we're like, we live here. He's like, oh, and all the wind in his sails just sucked out because he couldn't sell me this vacation package that or this timeshare or whatever he was trying to do. But I know it's got to be tough. I know it's tough now and then approaching people with money being tight. Although you are in a tourist vacation type location, some of these folks here that are visiting worked really hard to have the money to do that. And they don't have anything else besides that. And then the people who do live here, they're not interested at all. Just not interested. But the banks, the credit card companies, they have 3 customers. The first one is the one who's going to sign up for a credit card. They're going to receive it. They're never going to use it. They're low on the totem pole for these credit card companies. They don't care. They don't care about it. Number 2 is me. Number 2 is me. You get the credit card with that one I was saying about with the rewards. You get the credit card and you use it a lot. And you pay it off often. Therefore, you are valuable to that credit card company for the possibility of you charging a large amount, perhaps maybe forgetting about the promotional period and getting hit with some interest, or having to carry a balance longer than expected paying interest. But those are highly unlikely scenarios of the customers, and more than likely the credit card company, the bank, is going to like you because you provide them with revenue through transaction fees. So every time you swipe your credit card, the merchant charges a transaction fee. So the credit card company receives that. It's a perk, it's a benefit. So then the third customer is similar to the second customer. But the third customer has got the card, they know they're going to use it, and they know they're not going to pay it off. That's the third customer that the credit cards and the banks really like. But it's a little dangerous game they play. Now, granted, they want to make sure that it's a qualified credit recipient, they're credit worthy through the application process and checking your credit score and your payment history and your income, which they don't really verify on credit cards. You could put down you make any money. They're not going to check that. They're really only looking at your score and your history. If you have a decent score and you don't have any late payments, so, they don't really care how much you make. How much you make really will dictate and determine probably how much your credit limit is. But then that's also a weighted factor in conjunction with past credit card history, high limit elsewhere, high credit limit, high revolving limit somewhere else, things like that. The more credit you have, the more credit they'll give you. They do it with cars too. So like the car, everybody's got their own credit score. The car company, the car loan, the banks for the automotive industry, for the auto loans, they have a car credit. It's not just your score, there's a car credit. The credit card companies, they have credit card credit. Mortgages, they have mortgage credit. It's not just the score. So the mortgage is a little different. The mortgage companies, I don't want to get off track here, but I do want to make sure I clarify exactly what I'm saying. The mortgages, they have an underwriting process, which basically falls into the category of your credit score, your debt to income ratio, and your income. And that's pretty much it. For a conforming mortgage, if you go exceed the conforming mortgage and want to enter into a jumbo mortgage, a jumbo loan for a really expensive property, underwriting changes and it's all completely different. In my opinion, I would avoid a jumbo mortgage, but that's just me. The auto loans, auto loans, car manufacturers have their own financing, but anybody in the automotive industry, when it comes to lending, they have a car credit. So basically, they're probably going to be comfortable loaning out, approving credit for 60, 72, 84, 96, 100. I don't know how far they go now, but these loans, what they're trying to do is as the car prices go up, notice how I said the prices, not the value. The value of these vehicles are not going up in most cases. I'm a little biased. Porsche value, I think is high on the list. But for the most part, car values have remained the same. There may be a few new features. If you're getting a diesel truck, that's a different story because you're now entering into the 1,000, 1,100, 1,200 pound-feet of torque territory. The towing capacity is through the roof. That's a whole different story. That's for work. Not to be a mall crawler. But for the most part, vehicles' values have not increased anywhere near the same rate in which the prices have gone up. But with that being said, as the prices continue to go up, the banks have to find ways to make people be able to afford them. But as that occurs, manufacturers and car dealers and everybody else involved in this little game realize that this is a little dance. We're going to keep inching up. If we keep inching up how much the cars cost, the banks will keep inching up how long people can finance them, bringing the payments back down to that comfortable level, which now a comfortable car payment level is probably anywhere between $500 a month and $1,000 to $1,500 a month, which is now probably the comfortable based on how expensive the cars have become. Especially now that the dealerships, they pulled in all these used cars at over book value. So they're going to have to play a game with the financing to make that work. They're going to have to play a game with the financing, and they're definitely going to have to play a game with the gap insurance coverage, as there's going to be a ton of vehicles out there with loans and liens on them that exceed the value of these vehicles. And in a total loss situation, the folks that are driving these cars and making these payments, they're not going to pay. They're not going to pay that negative equity. So they better have gap insurance on it. But what happens is, as they play this game, the banks are looking at your previous car loan history. And now, since the average cars, like new cars, like $40,000, $50,000, $60,000, they'll probably loan that to pretty much anybody. But if you want a vehicle that's $100,000, then you would probably have had payment history on a previous loan for a vehicle that was 50 or 60, maybe 70. I think it's 50% over your high. So if you had a $50,000 loan on a vehicle, they would take you to 75. You would probably, you had good payment history, a few months, a couple years. you had good payment history, your credit score was obviously still good, and your income would support it. And that's the thing about car loans. They don't check your debt. They only check your income. So if you're in debt up to your eyeballs, but your income can support that new debt, depending on what shows in your credit report, they'll lend it to you. You know, if you've got a lot of debt that doesn't show in your credit report, you'll still qualify for a car loan because they don't know that. They don't look at that. I mean, these car loan approvals come back in minutes. Like, they're not doing a deep dive. I think they don't really want to, for the fact that if they dive too deep, no one would get approved, or very few people would get approved. So it's a little bit of a dangerous game that they play. But at the end of the day, they'll give you up, I think it's like 50% over. So then if you had a $50,000 loan and you did well with it, you would qualify. Half of that's 25 grand. So you add that to the 50, you're at 75. And then after that, then you would be at, what is that, like 37.5 on top of the 75. So that puts you at 100 and, what is that, 12.5. So if you had a $75,000 loan, you could probably get up to 112.5. Again, your income would have to support it. But I will say that when you cross over 100, I would say that probably when you cross over 100 grand on an auto loan, anything below that, they're probably going to let you 100% finance, or they used to. They may change that now with the way that the values are going. Any value, they may change that. So they may change it to now where if it's 50 grand, you're going to have to put 10% down. You have to put 5 grand down, maybe. But I think over 100, rarely will they let you finance 100%. Unless, so if it's a $100,000 car loan and you want to finance it and they want 10%, you got to bring 10 grand to the table. Unless, and that's if your income supports it. If your income doesn't support it, then obviously your down payment is going to have to be great enough to bring the price down, the finance value down enough so that the monthly payment falls within the criteria that you could afford it based on your income. But unless it's an extreme circumstance where you're trying to finance a vehicle for $100,000 or more, but if you're trying to finance a vehicle for $100,000 and it's worth $150,000 and somehow you're able to buy it for $100,000, the bank will probably finance it 100% because there's already a $50,000 equity upside in that vehicle. But odds that happens, very slim. So for the most part, over 100K, you're putting money down. And you have to have some pretty strong car credit history prior to be approved. But with the credit cards, they look at your previous high limit. So if you're trying to get $2,000 credit limit, I don't know what their factor is. I don't know what their percentage is. But if that's your first credit card, then odds are it may not happen, depending on your credit situation. If you got good credit and you're over 25 and you got good credit, odds are you'll probably get a $2,000 credit card limit. But if you're like 18, 19, 20, first credit card, you probably won't cross $750. Probably won't cross $750 on a credit card. Now, a store card, maybe a little different. I've actually noticed, I take that back, I had a card for furniture. I think it was Ashley Furniture. And the key with that is you walk the store, you find all the furniture you're going to need. When we do this, we've done it 2 or 3 times. We walk the store, we buy furniture for the whole house. That way, what they do is they run an application and they ask you what's your purchase. And somehow, some way, your credit limit always comes back to match the purchase. Go figure. So, buy $10,000 worth of furniture. Odds are you're going to get 48 months, same as cash. That's a good deal. And on top of that, you're going to get discounts for buying more from the store. It's a good deal. I like Ashley Furniture. I do. So the stores are a little bit different the way they run their credit and the underwriting for that. But I think that they also look at it as we know what you're buying and we're tying the asset to the purchase so that theoretically they could repossess it if they needed to, if you were to default and not pay for it. Long story. Don't do it. So, but with a credit card, just a regular credit card, non-secured. So if we're talking secured credit card, then that credit limit is going to be based on how much cash you put up. So if you want a $2,000 credit limit on a secured credit card, well, just give the bank $2,000. They'll hold it. They'll use it as your credit limit. They'll report to credit agencies, Equifax, TransUnion, Experian. But at the end of the day, it's your money. So you're not really borrowing it. You're just using that secured credit card as a means to an end to build credit history. However, for an unsecured credit card, they're going to look back and say, what is your credit score? What is your income? How old are you? Possibly other demographics that allow them to make these criteria. See what I'm saying? And also your previous high limit. And they're going to inch you up from the high limit. Now, the crazy part about it is, for me, on my rewards credit card, as I use it more, remember, they're racking up these merchant fees as I use it. It doesn't charge me. It charges the merchant, and then they run that through the store, whatever business is running the transaction. Businesses have a fee. If you ever use Stripe or any other credit card processing, Square, you know that they say it's 2% or some percentage plus a few cents for a transaction. That goes to the processor. It's a split between the processor and the credit card companies. But the consumers don't see it or feel it, although the businesses are accounting for that in their prices. So it does get translated, but at the end of the day, the credit card companies are making money on that. So they like it when I use my credit card. Even though I pay it off, they don't make money on me for interest. They like that they're getting the transaction fees from me. They're getting transaction fees from me. They're getting promoted for me showing their logo. And there's a perk for them for that. So what do? They raise my credit limit because they want me to continuously swipe that card more and keep making more money for them. And they're hoping that I rack it up real high and I forget about it and I start paying interest on it. That's what they really want. But that's a credit card with like a $50,000 limit now because they keep jacking it up. And I'm like, okay, whatever. I'm just using it for daily purchases, whatever. Getting my points. And so the cool thing about those points is they come through in cash, and there's no reporting. They come through in cash. It doesn't get added to my income on my taxes. So for someone out there asking me, how do I get a credit card with a $2,000 limit? To me, it's not a high limit. So I'm wondering, so I said, hey, real quick, just kind of curious, what is your goal for this credit card? Because if you get a $2,000 limit, but the APR is through the roof, and your goal for the credit card is to use it to help you finance a purchase, that's not helping. If your goal with the credit card is just to get a higher limit, to improve your credit availability, the ratio of availability, improve your high limit, keep inching you up in the credit card limit game, okay, then the rate probably doesn't matter. You're probably never going to use the card. It depends on what the goal is. Well, it came back that the goal was a little bit of a twofold scenario. It was a little bit of a safety net, and also to fund holiday purchases. So, and I appreciate this person's transparency on the reasoning behind it, but I had to follow up with, if you're looking to get $2,000 on a credit card, which Lord only knows how much that interest is going to charge you over time, paying off that balance if you were to max it out and pay the minimum payment, and you don't have the cash to do it, so you're charging on a credit card, we're already in a tight situation. It's already tight. You see, there's that pressure. Remember that pressure I was asking you guys about? That's the pressure. So I said, well, maybe that's not the best route. If you're using it to bail you out of a jam and fund holiday purchases, I didn't go into great detail. I would have to assume these are Christmas gifts or something like that. And this is what I'm talking about. This is what I was saying that I didn't realize, and I apologize that I didn't realize that things were as bad as they are today, right now, with some folks out there who have their backs against the wall, who are looking for solutions to these problems, but ultimately what they're looking for are band-aids to put on their gunshot wounds. Not saying, okay, well, how do I get to a position where I don't need to charge and finance an emergency? How do I get to a point where I don't need to charge and finance holiday expenses and buying Thanksgiving dinner and traveling to see family for the holidays and buying Christmas gifts and whatnot, New Year's Eve parties and things like that? Because 2023 is coming. It's coming fast and hard. And I'm going to tell you guys right now, 2023 is going to be a bear. 2023 is going to tear some folks apart. 2023 is going to crush some families. The Fed is on a rampage. Jerome Powell, Federal Reserve Chair Jerome Powell, has already said families and businesses are going to feel pain. We are already seeing the results in the economy, in the market, in the automotive industry, in the jobs market, in the housing market. Banks are making layoffs. Banks are making it harder to access your funds. Tech companies are doing layoffs. Mortgage brokers are being laid off. There's so much going on. Stores are closing left and right. Businesses are shutting down. Tons of bankruptcy, tons of default, tons of financial problems right now as we're seeing the stock market crashing, when this should be a time where folks are paying attention and dollar cost averaging and continuously reinvesting in themselves, in their portfolios, to further build their net worth, so that when we do recover, when we start to recover, you start building again. Not a time where folks are trying to use credit cards and get more credit cards to tack on more credit card debt to possibly cover an emergency or just a daily expense, where you kind of got to think. You kind of got to think to yourself and put yourself in this mindset of there is no unwrapping expensive gifts for Christmas this year. No. Why? Because we got food on the table. That's why. Because we got a roof over our head. That's why. Because we are trying to position ourselves to not be like everyone else, which is not everyone else, but this is just a generic statement, and fall for this trap and this scam of just continuously spend, continuously getting beat down with more inflation, while the paychecks are drying up. They're being spent before they even show up. Folks are looking for payday loans. People are pawning things and trying to sell things, not to better position themselves, but only to further dig themselves deeper into the hole. When now should be the time where we're focusing on investing. We're focusing on building businesses. We're focusing on cash flow producing assets. We're focusing on side hustles and passive income streams. We're focusing on building up our net worth and growth, so that, we aren't wiped out by inflation. We're not worried about our entire family getting shut down and crushed with this economic cycle that we're currently in. Unfortunately for some, folks on fixed income, I don't think folks on fixed income typically lean on credit cards too much, because in my experience, I've seen that they know that their income is what their income is. So running and charging stuff on credit cards, like, they know there's no paying that. But, there's some older folks, there's some retirees, there's some disabled on fixed income government assistance programs that, we need to be talking about building strategies and cash flow producing passive income streams, because that's the other thing. These government assistance programs, they put a limit on how much money you can make. They put a limit on how much money you can make. They put limitations and boundaries on you actually improving, getting out of that situation. They put these ceilings on folks to keep them down and keep them suppressed and keep them reliant and dependent upon the government, which isn't really helping them. But they don't put a limit on how much money you can have. You see what I'm saying? That's very important. That's huge. If I was stuck in a situation like that and they put a limit on how much I could make or how many hours I could work or what businesses I could have or be involved with, that's one thing. But if they're saying that I can have a certain amount of money, okay, now we're on to something. Now that's part of the game, folks. This is a game to be played to win. And I'm not saying that you should cheat, but I'm also not saying that you should play fair and lose. That's where a lot of people get caught up. They get hemmed up. They play fair and they lose. But if you yourself or anybody you know, a family, friend, loved one, relative, spouse, girlfriend, boyfriend, side chick, whoever, whatever it may be, side dude, if they, them, you are in a situation where you're saying to yourself, I need a credit card. I need I need another credit card so I can pay off my other credit card. I'm gonna use it to pay my other credit card. I'm gonna do a cash advance. That's not the answer. Now, I do know that there are some folks out there that they're waiting on bonuses, perhaps maybe from their employers, that these are annual bonuses, which Christmas bonuses may be a little light this year. I don't know if employers are sharing this information with folks ahead of time, but if you're banking on a Christmas bonus for 2022, just don't get your hopes up, that's all I'm saying. Maybe it comes out good. Maybe you get what you expected. Maybe you get more. But if you get less, it's a sign of the times. And it could potentially be a sign of the times that folks want to keep as a sign of the times, to keep some people down, keep some employees down. You see what I'm saying? So if you are in this situation, we need to be talking about not how do we rob Peter to pay Paul. We need to be talking about how do we increase our income? How do we lower and reduce our debts? How do we tighten up our budgets? How do we invest in different businesses and investment strategies and investment vehicles that are going to put us in a position where every single day we're worth more? We want to be worth more, and we want to spend less. We want to be worth more, and we want to invest more. Because spending rarely makes money. Investing makes money. Now, there are some instances where you can spend as investments to make money, but that goes a little bit deeper. It's like Dave Ramsey telling folks never get a credit card. The reason why he says that is because he knows that most folks are not capable of managing the responsibilities, and they lack the financial prudency and wherewithal and education and discipline more than anything to manage these credit cards. So he just says don't do it. But the simple fact of the matter is credit cards are not bad. Credit is not bad. Loans aren't bad. If you know how to manage them, if you know how to use them as the tools that they are to build your wealth, to get greater returns than the investments you put in through whatever interest you may pay on these. But what he does is he just leaves it at don't do it. So, I don't want to go too far into the weeds, but there are instances and situations and scenarios where spending money is an investment. I'll just throw one name out there to you guys to let you guys understand and know what I mean by that. On the simplest form is Mr. Beast. Mr. Beast spends money as an investment to make money. Plain and simple. Watch his videos. He spends money to make money. That's all it is. But you got to get to a certain point. You got to get to a certain level. And if we're at a level now where we're just trying to get a $2,000 credit card limit to pay for an emergency and buy some Christmas gifts, we're not there yet, folks. But we can be. We can get there, is what I'm saying. You can get there, and I want you to. But at the same time, I did want to come on and share my thoughts and my opinions with you folks about some of the topics that we've been covering. And I just, I wasn't fully aware of how some people are viewing these current financial economic situations and the struggles that they're facing and the theoretical solutions that they think are going to help them, but they're not. So I do apologize for that. I'm sorry. And if there's anything I can do to make it up to you guys, just let me know in the comment section on what type of video, what type of financial information and or education and or investment opportunities you guys would like to know more about and like me to make videos about to help folks get out of this deep, dark hole that they're falling down, which is only going to get deeper and only going to get darker as this recession drives forward, as Jerome Powell and the Federal Reserve continue to put the hammer down on inflation rates, or I'm sorry, on interest rates to try to fight inflation, as the pain starts to sink in even more for more folks, as the next CPI report comes in, as layoffs start occurring more often, as prices continue to go up, especially on food and fuel and housing, and some housing depending on the market, but mostly food and fuel and insurance. As these prices continue to go up, and prescription drugs, as these prices continue to go up, we need to be working on ways to outpace our income with this inflation. Because like I told you guys before, inflation has existed, always existed, and will continue to exist. But the key is the survival rate of it is based on your ability to out earn that pace of inflation. And if you guys want to know more, always there's links in the description. The group is available for anybody who wants to join. I've actually got some links down there that you might want to check out for building businesses, starting businesses, forming LLCs, and also for anyone interested in pretty much getting a YouTube channel started relatively easy. There's a link down there for Fiverr, and it'll literally like walk you through and streamline making a YouTube channel, almost fully automated, that could bring you some pretty good money. I was actually go check out this channel. It's called Dontavious Turner. Go watch Dontavious Turner. He just put up a video where he shows how much money he made from his YouTube channel on the side. Pretty impressive. I think you guys are going to be pretty shocked to see how much money he made on the side. And he flat out literally says that he doesn't really work on that channel, and it made a pretty sizable amount of money that I'd be willing to bet most people would not turn their nose up to get that kind of cash every year. He shows this full year. He actually started making money on that channel within the first 30 days. But he shows how much he made in the full year, and I'd be willing to bet that nobody would turn their nose up to how much money he made. So go check out Dontavious Turner. And one of his most recent videos about how much he made. The thumbnail actually looks like the YouTube Analytics background page. And maybe I might do the same. I might do the same and show you guys how much I made on this channel so far. And I'll put it up for the members to see if you guys are interested. But either way, you guys take care. Be safe. I'll see you on the next one. Bye.